Hello viewers and welcome to this week's video. My name is Shannon Rivkin. The video this week is, not surprisingly I would say, on the Afterpay and Square deal. Headline being here, with an impressive takeover bid for Afterpay from payment giant Square. What should Afterpay shareholders do, and what are the implications for the buy now pay later industry? First chart, Afterpay since the beginning of 2020 saw already on elevated levels as the business was performing very well. Immediate sell-off as the pandemic hit, and the fear of what they could do to spending, and in their case as well, their bad debt situation, as the pandemic evolved and as the trends in the economy started to evolve, became quite clear that e-commerce was going to be one of the big winners from COVID, and Afterpay a huge exposure to that. Got to September here, where there was a bit of a sell-off as PayPal announced its buy now pay later product. Continued to back onto new highs and up, almost as high as $160. And then, of course, we saw the big sell-off, not just in Afterpay, but really across all growth names, as long-term government bond yields started to really rally hard, and the view that inflation was going to be a factor, and we started to see a rotation into value names from growth names. And at that point, it kind of got all the way down to a little over $80. Before we start to see those bond yields turn around a little bit again, and this steady ascent back here. This was an interesting one, which is only recent, where Apple announced their buy now pay later product. Then, of course, we get here to where Square has announced its big merger. Really, exciting outcome for Afterpay shareholders, founders in Nick Molnar and Anthony Eisen. It's a deal that really, vindicates the product. This is an industry, I think, that has a huge opportunity ahead of it. It's going to, while it's only a tiny percentage of overall online transactions right now, I think given at least younger generation's aversion to credit cards, this is just going to end up taking a bigger share of the pie. And we talked about Afterpay and the sector in one of the recent videos, and I said the biggest problem really now facing the Afterpays of the world was that this market, because it's going to get so big, is going to attract bigger and bigger players, and that's exactly what the PayPal and Apple entries have done. And now, of course, you see Square wanting to do the exact same thing, but rather than building it themselves, they've decided to go the road of buying one of the big market leaders in Afterpay. And I think that's a trend you're going to continue to see. Klarna and Zip are probably and Affirm are probably the other big players of really any scale that probably don't have the financial capacity to compete with the big players like Apple, PayPal, and now Square. And will they fall, or will we see some consolidation between those two? There's a rumor that Klarna is on the Zip share register, and maybe they'll have a swing. And I think this trend of consolidation is probably going to continue. Where to now for Square? This is the Square share price starting again from the beginning of last year. Sell off when the pandemic hit, and like Afterpay, a real beneficiary of e-commerce spending, and as certainly as economies have reopened as well, their business continue to grow, and I think their revenues have over doubled over the last year or so. Look, it's a very impressive business. They have two parts of it. They've got the merchant terminals, which most of you would be aware of. We've all tapped on those at our local cafe or whatever that is. Australia is the second biggest market for its merchant terminals. The other side of their business is their cash apps business, which they have 70 million users in the US. That's, I think, probably the more exciting side of the business. That cash app allows its users to make deposits. It allows them to buy things like shares and cryptocurrencies. And the real thing that's been missing in their story is how they link that consumer part of the business to the merchant part of the business, and that's where they see this Afterpay purchase fitting in. I've said for some time now, I don't see Afterpay as a finance business or a lending business, but to me it's a lead generation business. It's one of those incredible businesses where both the end user, which is obviously happy to get its product now while paying it over 4 installments with no interest. Certainly those stakeholders are happy, but its merchants are happy as well, even paying the high rates that they do, which is I think about an average of 4%, because it is a lead generation tool. And I, for example, invest in a business that has used Afterpay. And while the initial debate was, can we justify giving 4% away? When, of course, with some retail partners that we have, we give away significantly more than that, 20, 30, 40%. Is 4% worth giving away? And the view was potentially could this cannibalize, our existing online business? And the immediate response was, well, we're actually just getting new customers coming to the platform that we never had before. And so, as I've said, it filled that lead generation role as I thought it would. So that's going to be a really good fit for Square. Question is, of course, is this in the share price already? There's no. Here's a little bit of a chart showing a table showing the growth in active consumers and active merchants for Afterpay. It's really, still early in its life. As I said, the overall size of their piece of the pie compared to the overall pie remains, infinitesimal. So the opportunity remains very exciting. But how much of this is in the price of Square and Afterpay? Look, arguably a lot. Square popped already 10% on the news that they are going to make this deal. Obviously, investors and analysts out there like it. I think there's good reason that it popped, but I think probably the direction from here is going to have a lot more to do with the direction of long-term bond yields, which I obviously referenced with this sell-off here, than it will necessarily on how this deal fits. But there's no doubt that it's a good fit in my mind. As we need to see the execution work. They need to do it right, but if they do, I think Square shareholders are going to be happy over the long term. Anyway, that's it for this week's video. Thanks for tuning in. If you liked the video, please click like and subscribe, and I'll be back to you next week.